Well, the big story of the day is that CPI print. And while inflation did cool in October more than anticipated, shelter remaining one of the categories that we have seen pricing pressures remain consistent, driving core inflation higher, rising about 0.3% on a monthly basis, up 6.7% from a year ago. It was enough to offset the decline that we did see in gas. Here was some of the key factors driving shelter higher. Yahoo Finance reporter Dani Romero joining us here. Dani, so what's going on?
Well, CPI is for shelter is a lagging indicator. So while we saw another rise in October's results, really it's showing disinflationary momentum. And so if we really compare that to real-time data, asking rents has flattened out due to the fact that there is more inventory hitting the market and home prices have been rising. So we really won't see those numbers reflect this CPI data until next year. And also, if we go back earlier this year, home prices were softening. Asking rents were also softening too. So we won't, like I said, we won't really see those numbers reflect this data until next year. But I've spoken with economists. They say that the results really show that disinflationary momentum is really proving to be true right now, but it could be a bumpy road ahead.
And Dani, as the cost of shelter is going up, is that translating to higher equity for homeowners?
Brad, people are sitting on high-value homes, but there is some real-time data from a real estate organization, Adam, that found that people that are sitting with a home that has a mortgage, their equity is slipping, and it's been the fastest pace in 4 years. Well, why is equity slipping? Well, people are not only have their mortgage, but they're taking out a home line equity, a line of credit on top of their mortgage. So they're taking out more debt. And so when that happens, your equity goes down a bit. And I even spoke with a lender from Loan Depot that told me 30 to 40% of their clients that are seeking a HELOC, a home equity line of credit, really are looking for about $75,000 in a loan because they want to consolidate their debt, whether that is they have credit card debt or a auto loan. They really want to find another resource, and for them the home line equity line of credit, really for them that rate is about 8% right now. It could go up obviously if rates are fluctuating, but from the last time I checked it's about 8%. So that's a lot lower than a credit card rate right now. But again, yes, people are still sitting on a really high-valued home. It's just that if you take out more debt, then obviously your equity goes down a bit.
Yeah, that's right. Average mortgage rates sitting at about 7.13% in the third quarter, highest rate that we had seen as long as the NAHB has been tracking that figure. Dani, appreciate you breaking down some more of these details, putting some more color behind the numbers that we're tracking here. Appreciate it. Yahoo Finance's own Dani Romero.